All right, highlight for today had to do with when you run through a door, okay, and it's locked. Every time you run into that door with your shoulder, you're loosening up something. You just have a better and better chance for that door to fly open. You have to see that and realize that and understand that metaphor when you're looking at a chart pattern. So the S&Ps had an opportunity to go up and blow through 90. Why 90? Well, because earlier in the session, overnight, it was the overnight high, 90, roughly 89 half, 90 even in the S&P. After the open, they put in another swing high, okay? So they come up there once overnight, kind of sort of in there, but definitely twice right there, and then a third time. And I had said, they got a chance to really continue to roll higher. That changes. The reason and the way you become less stubborn and then not stubborn at all with being convicted to your uh, married to your opinions is this big down bar that came, and I had said, you know what? The downside that we just seen, the move lower, so to speak, has to get respected, which generally has a retracement and then a continuation. So without opening up this chart, you could see from this high to this low was the move that needed to get respected, and it did in there. And then the downside was going to be the right side. It's not so much being a little bullish in there because you're going to blow through the door. It's changing your mind from being bullish to bearish. We call them B2B moments. And you got to know what B2B moments are and be able to run through that progression so you're not married to an opinion. Now, there was something else that happened. Our friend, the NQ, which lately in the highlight videos, I'm trying to underscore because it's so important. When you, first of all, had a B2B transition, bullish to bearish in this case, you had a situation right there and then definitely right there of running through the door again. At some point, they're not going to hold this yellow line and bottom. They're going to roll through it. And the reason why they're going to roll through it is because conventional wisdom sees all that become support, and then they're going to play support. And then that's the time it doesn't work because you loaded up everybody long playing support that already was support. And now those longs turn to sellers, and down we go. So if it's obvious to a fifth grader, then it's obvious to most of the rest of the world, and you don't want to do what's obvious. You don't want to do what's obvious. The only time you want to do what's obvious is if you could jump in because some extreme event crosses the wires. It's obviously bullish or bearish. You want to jump in long or short. It's totally different. But when a chart pattern looks like support and a fifth grader could see it, you want to do the opposite. You want to position yourself to do the opposite. And so many people see support and they're going to play support. You already should have played it. And so you can't be surprised when it navigated through there and had some really good downside in the first half an hour or so. Then there was our friend the NASDAQ, which we're always keeping an eye on for perspective. Let me blow up that chart. And let's take it to about 8:30, 9 o'clock. The NASDAQ was weak and kept making lower highs throughout this whole sequence. All right. They had this high made. Actually, that's too far along. That's too far along. Where the hell is, here we go. This had a nice downtrend look to it, but we don't know that it's going to have this downtrend look to it. It's too late. That's why the trend is not your friend. Because once you see it, it's probably too late. However, the NASDAQ did show that it was weak early on. It didn't make a higher high after the open like the S&Ps did. They had a nice sell stops below their call at around 0302, if you guys remember. And that accelerated the NASDAQ to the downside, which helped push the S&Ps off those 90s and sent them lower. So I go over this again and again and again. Trading is all about taking a skill set and overlapping it with another skill set. As long as those two circles and those two skill sets are appropriate, are important in the art of trading, then you overlap them and you've got a much better chance to make money and stay successful. Get successful and stay successful. But those circles of skill have to be appropriate. They can't be, well, I want to be a carpenter and I'm going to use this. I'm going to use this stick as a screwdriver, right? Or a piece of thread. What do you use that thread for? It's my tape measure. That's not an appropriate tool for that trade, for that industry. Order flow correlations. Get into it, understand it. Only follow the patterns that matter, and then be able to understand that the longer, the more support works, the less it's going to work. That's opposite of conventional wisdom. Stay safe. Subscribe to this channel. Let's get over 1,000.